Hi. So, maybe it would be great if we start with a bit of an introduction. Can you tell us a little bit more about your fund and since when have you been starting to look at climate tech? Maybe, Anne-Claire, we start with you.
Sure, pleasure. So, hello everyone. I'm Anne-Claire. I'm a partner at Blisce. To tell you a little bit about Blisce, it was founded in 2014 by entrepreneur Alex on Mars. I've had the pleasure to join in 2019. Since 2014, we've invested more than $450 million across 23 companies. These companies were more focused on consumer tech, so we invested in Spotify, Pinterest, Headspace, Too Good To Go. And one of our distinctive characteristic when we invest is that we put sustainability at the core. The way we've been investing is sustainability is at the core of our decision making and at the core of the investment life cycle as well. And finally, at the core of what we do as a management company, because we give back 20% of our carry to charitable causes.
Fantastic. Thomas, maybe you can share a little bit more on the growth side as well.
Yeah, of course. So, hey everyone, my name is Thomas and I work for Equity Ventures, which is a Swedish venture capital firm. We're part of the big equity group that you probably know. It's one of the biggest PE firms in Europe. Long story short, we've launched Equity Ventures in 2016. Since then, we've raised 3 funds. The last one was announced 6 months ago. It's a pretty big one. It's 1.1 billion euros that we're going to try to invest in 40 companies over the next 3 years, ranging in 4 sectors: B2B, fintech, and obviously climate, but also consumer, which I look after. Yeah, we invest in companies from C to Series B, and we've invested roughly 180 million euros in venture over the last 5 years in climate tech companies.
Louis.
Glad to be here. My name is Louis. I'm a partner at a fund called Point 9, which for some of you might look like the most traditional, if not boring, seed fund. So we started about 12 years ago. We've invested in about 170 different companies in 30 different countries. And we started at a time where, software was new. And our job was to spot companies that had a chance to become generational company, mainly in B2B software. And yeah, look, fast forward 12 years, we've invested in 80% of what we do is, B2B software at seed. And some of the companies that we've backed are, you might know, like Zendesk, like Algolia here in Paris, Typeform, Loom, and a few others. And 20% of what we do is either consumer or hardware, and that's how we were one of the first investors in Revolut, one of the first investors in Tier, the mobility scooter company, and also one of the first investors in 2, lab-grown meat businesses.
Amazing. I guess I would like to start with the current situation on the market. Are you guys investing at the moment?
Yeah.
Yeah,
Racing
same.
a lot.
Making sure to make the commitment on stage so people can come after and ask you. When it comes to climate, has the current economic situation changed your thinking about the industry, or has it accelerated your wish to support climate companies, or maybe made you check twice?
Yeah, I'm happy to take that. I think it's actually even more interesting to look at it with a longer perspective of 10 or 15 years ago when there was this first wave of climate tech investments, like green tech investments, and that wave was actually not very successful, meaning most of the people lost money investing in these startups and not a lot of generational companies emerged. A few did, like Tesla, but not that many. So the question that we have and the question that our investors have is what has changed today that would justify investing in climate, although it didn't work before. And then the macro environment today, meaning versus 2 years ago, doesn't change that much because at the end of the day, we're supposed to invest in companies that will develop in the next 5, if not rather 10 than 5 years. And the economy works in cycles, so that doesn't really impact us, especially as a seed fund. Now, when it comes to climate tech specifically today, there are a bunch of arguments beyond the fact that there are, a lot of people building startups in this room that justify investing in climate. And you can actually look at it based on like 3 components, which is technology, like is the technology available today to build generational company? Is the regulation pushing companies and technologies to be developed? And what do the market expect? And for each of these components, we can see that like things have changed dramatically in the past 10 years. So like if you look at technology specifically, like the cost of solar, the cost of batteries, the cost of a lot of foundational technologies that dropped dramatically by roughly 10x in the case of solar and batteries, and we've invested in a few companies that are linked to this sector specifically. When it comes to regulation, I mean, I'm not a politician, but like there are a lot of politicians actually at this conference, explaining how they're changing policies, and the price of carbon as well increasing is actually pushing people to be more sustainable in their practices and develop as consumers and as individuals better practices, which then link to the third point, which is more and more companies and more individuals as consumers are expecting more sustainable practices, which creates generational changes in terms of consumer habits. And so this trifecta of market regulation and consumer expectation is creating, we think, a very fertile ground for building really significant companies within the next 5 to 10 years.
The hope, I guess, we all have is that after this wave of instability economically, there's a clear understanding that the companies that need to be funded should be building viable solutions for the future. So climate sits on this trend also in alignment to what you were saying. Are you investing in climate? I'll go to you because you guys have developed quite a comprehensive thesis on climate. When did this start, and how did you kick off this kind of excitement?
Yeah, so it started very early on. We're a Nordics fund, and I think that sustainability and climate has always been, in our values. It's not a trend that we follow. It's something that is deeply rooted within what we do. Right. I joined EQT 2 months ago, by the way, and when I joined, I was told 2 things. Like, your job is, of course, to return money to your investors, but also is to invest money in companies that are sustainable. And these 2 things go together for us. Now, the way we do that is that usually we try to have a thesis, around what needs to be solved in terms of problems right now in the world. And once you identify like big problems, electrification was one, and therefore we invested in companies like Einride, which is electric trucks, Verkor, which are batteries, HART, electric planes, Candela, electric boats. I can go on, but I'll stop here. Then you start to try to find solutions, right? So what I do when I try to find solutions is that I spend like lots of time with experts. Once I identify a problem, like right now, a problem I'm looking at is industrial heat, which is creating lots of carbon, right? And I'm trying to understand which is the best solution, to tackle this issue. So spending time with experts to actually, create a belief. And once you have a belief, you can start to look at companies and founders that have like the right approach to solving this pain.
Anne-Claire, I would love to ask you a little bit more about the approach that you have taken, which goes outside even of the scope of climate, but focuses on this impact element. I think it's incredibly important for all of us to be building sustainable businesses, but sustainability is not only the ecological side of it. Can you explain a little bit more how you've been thinking about this as a fund?
Sure. So there's a question about what is a responsible or sustainable business. And that's what we've been thinking about for the past years. And our view on this was we can't allow ourselves to exclude in a very narrow vision all of the business that are not per se sustainable, but whether it be an actor of the change within those businesses. So, for example, we've taken Headspace. Let's say Headspace, I don't know if you guys know Headspace, very amazing mental health software company, not software, sorry, app. And we came into this company saying we're going to help you build your theory of change. So theory of change, you guys know this, it's usually used by NGOs to really build their, why are they here, why do they exist, and what are they going to bring to the community. And that's what we're doing. So when we say headspace, it's pretty easy. We say, well, mental health, social, there's sustainability in here. But then we reviewed all of their businesses practices, and we have an amazing head of sustainability who does that very well. She went into Headspace, she reviewed all of their processes and built from the ground their theory of change and how they could improve, not only in terms of social, which is at the core of their business, but also in the term of environmental approach. And for example, to give you a little bit of intel on what we do, last year 38% of our portfolio companies were measuring their carbon emissions. This year it's 70%. So building this, we feel we're having a great impact and making general and regular businesses more responsible and sustainable businesses.
I would love for us to go, based on also what you were saying, in a little bit of a discussion about the maturity of the market. I've been in the space for the last 6 years, and when I joined, kind of, it felt like a desert. There was no climate tech companies, and there was barely any interest from the investment side. Maybe first starting with, where do you think the investment community is, from your perspective, and how many of the funds that maybe you collaborate with, alongside, of course, yours, do you feel have gotten to a mature level in investing in climate? I open it to the floor.
Yeah, happy to take this. So we met 6 years ago. You told me about climate risk. I knew nothing about climate risk. I was like, what the fuck is this? I think this has changed dramatically. There's a quantitative answer to this, which is that, you know, if you look at the number of countries in the world with more than $1 billion invested in climate, it's like 5 already, and more than 100 million, it's 13 countries. So bottom line, the amount of money that's flowing into the market it's growing, and you know, people adopt different approaches to investing in climate, and I guess we represent different approaches to, you know, what's the best way to play this. So that's one. Then on, you know, what are people interested in? I guess you can look at the job of VCs as like, some people say our job is to time markets. So what's the likelihood that within the next 5 to 10 years, which is the investment duration that we have, you can build massive businesses. And then you can adopt some kind of a holistic approach when it comes to, you know, what are the big problems to be solved. And on that part, I actually like the framework that, you know, Bill Gates has, which is more or less to say you have 25%, 25%, 25% when it comes to, you know, decarbonizing building, decarbonizing food, and decarbonizing the grid, like electrification, and then remains transportation and building 15% and 10%. And, you know, people go after each of these opportunities and start investing more and more. Yeah, I guess I'll stop there.
Does anyone want to add something with regards to how mature do you feel the investment community is?
I can give you a little anecdote. So 5 years ago, I worked at Entrepreneur First, which is a talent investor / company builder, and we were creating many companies that were climate companies back then, but we were like branding them as biotech companies, because when we pushed them on the market to VCs and it was branded as climate tech, people were like, nah, it's not for us, you know. While biotech was a bit better. Now it's the opposite. Like when EF creates biotech companies, all of a sudden they're called climate because everybody is crazy about climate companies today. So I think it's not a quantitative analysis at all, but I think it's a little nice story to show you that mindsets are evolving.
Switching maybe to the startup side, what are the domains within climate tech that you see evolving, maturing, and eventually you would like to back? Maybe I start with you, Louis, given you're on the seed side.
Yeah, so we invest very early. So we invest anywhere between €500,000 and €5 million. Which means that most of the time the companies that we back are really early in their journey, with like maybe 5 to 10 people, the beginning of a product and some ideas as to what the customers will look like. And if we look at the climate-related investments that we've done in the past 3 to 4 years, now a lot of them are actually energy-related. So, you know, going back to the framework I was discussing just before, so like I work with a company in between Netherlands and Nigeria that's, you know, adding batteries and solar panel to diesel generators to create more sustainable utilities in Nigeria. Last year, we backed a company that's building an operating system for wind and solar farms, which is actually a combination of a software and a hardware company. And we just backed a company that's doing, you know, simulation for energy consumption and production on industrial sites. And in that case, we think that the market timing is great because also the price of solar and the price of batteries has decreased by 10x, such that, you know, the level of competitiveness of the kilowatt hour that you generate through this technology is now very competitive, especially in the past 2 years because of the Ukraine war. Therefore, we think that this change will happen fairly soon. On the food tech side of things, we backed 2 companies, one 4 years ago called Mission Barns, which is one of the first lab-grown meat business out of the US, and one in Paris, actually, that's building fake foie gras, or like lab-grown foie gras, actually. In that case, we also think that there's an interesting convergence of trends in between consumer habits, but also regulation, like foie gras is now being banned in New York and in San Francisco, that will push these companies to, you know, become significant within the next 5 to 10 years.
Yeah, there's a shift in the technology, in the way we're financing this low carbon economy, and I agree there's a lot of maturity on the market on the energy side, and I think some of the startups that are a little bit left out to me are the ones that are financing agricultural transition, which is a huge leverage on the fighting against climate change. This is actually something that we are working on backing by developing our first reforestation fund, and where we're going to fund regenerative agriculture. So there's still a lot of leverage to be done on the food side and on the industry side as well. I think there's a lot of opportunity still for startups to grow on this front.
And with the companies like Too Good To Go and Misfits that you've backed, you also clearly feel confident to support food already before, or like the transition of the food sector already before the reforestation fund, I guess.
Yeah, really, Too Good To Go became one of our main line of investment. We invested 85 million in this company, so it's we're pretty positive and pretty bullish on the food tech and how it's going to contribute to fighting climate change.
What would be interesting to hear a little bit more about is what is the difference between a traditional fund and a climate tech fund? I mean, we know that VCs speak to each other quite a lot, be it because of deal flow, be it because of other topics. And it feels, at least I can speak on behalf of all the companies that I know that have spoken to me about them getting funding. There was a moment in history where the climate tech funds were feeling the safest space to go to because you would not be treated, so to say, badly because your business just has a different cycle of development. Maybe I would start again, Louis, with you, just asking on the side of, like, Point9 has been known for marketplaces, SaaS, now all of a sudden food-grown foie gras.
I mean, first, I don't think it's sudden. Because, you know, this like Mission Barns we backed 4 years ago. I started working with this company called EMP in between Nigeria and the Netherlands about 4 years ago. I think the right way to look at it is like, you know, each of these firms have different investment theses. Ours is to invest primarily in B2B software at seed. And, you know, year after year, you have new kind of significant trends that justify building really, really large software businesses. And the premise of point 9 at the beginning was to say there will be software in any industry, and therefore let's go look at industry one after another and try to find the company that has a chance to become really large over the next 5 to 10 years. Today we're at a point where we know we need to decarbonize the whole economy, and therefore the amount of markets that need to be completely reshaped with software or without software is massive. And therefore, we believe that it's like an incredible opportunity for us to learn more and more about specific markets, be they energy, be they food, be they transportation, and see where there are interesting opportunities to build software companies. But we don't go at it with the approach of being a climate fund. We go at it with the approach of being a software-focused fund that understands the magnitude of the climate change problems and want to play a small part with our expertise, which is software. But if you ask a climate-focused fund, you will have a different perspective. But I also want to say we treat everyone well, be they climate companies or not climate companies.
Just a show of hands, how many people here are founders of companies, startups? Who's fundraising at the moment? Okay. So what about you? Because you guys have been, you have a foundation, which is obviously sitting on the side of the large fund. What was the reason to have like all these big vehicles for funding, but then also a foundation? Yeah.
Yeah, good question. So like when we invest in a company from the main fund, this company needs to have the potential to return the fund within the next 7 or 10 years, right? And out there are many projects, many companies that can't do that. The science is too heavy. You have to do some research in the lab before you can go to market, and therefore it doesn't fit into like the lens of the fund. And therefore we've created like this foundation, the equity foundation, that can do like smaller checks without equity, I think, which is under the form of grants, basically, so that we can basically like give some capital, some free capital to founders that are in need, basically.
We have 1 minute left, and I want to use it for a little bit of a fire question. Can you say with 1 or 2 sentences what is the reason that a company impresses you and you end up investing? 1 sentence.
It's going to be a combination of the founders and the science.
Mission-driven and purpose.
I would say relentlessness of the founder and size of the opportunity.
Thank you so much. I think this was a really fruitful